Okay, so I want to thank everybody that's in the audience for spending your time on a Saturday. It's an extra day where, we don't always think about the markets, and I want to give a nice presentation about one of the most important elements that makes up our trading system. And obviously, you can see the title of my presentation, Outperform the Markets, Make an Appointment with the Futures Markets. That's really the key to what we do. So I want to introduce myself again. My name is Lee Goldstein. I'm the trading director for 10 Minute Trades. Please remember that all the trades I'm going to discuss for educational purposes, it is possible to lose money trading futures, so please trade carefully. I want to make it clear that what we do is futures trading. We don't trade stocks, we don't trade options. Very often people get confused and they sign up for our service and they think that we're trading stocks, and we don't. I just want to make it clear. We trade futures. We use the Ninja Trader platform, but it is possible to use other platforms and follow along, trade the way that we do. And we trade a method that's called appointment-based trading, and it's a very important concept. Appointment-based trading, it's a simple time-based approach to the market, completely different probably than anything you've ever done before. You can schedule your trades on specific days at specific times up to a month in advance, and that's the key to what we do. All trading has risk. Appointment-based trading is no riskier than other forms of trading. Most commonly, you hear trading called discretionary trading. Now, what we do is different from discretionary trading. Some of our trading methodology has discretionary decisions based in what we do, but we are trading at a specific time, at a specific second sometimes. So there's a tremendous benefit to that, which I'll get into. But we're trading on a schedule. So why do we trade appointment-based trades? I love trading, but I hated being in the market. I hated sitting in front of my computers, and I found that the less I traded, the more I made. Most trading is boring. You sit around for hours and hours praying for a great setup. If you blink, you go to the restroom, you could miss the trade. You pick up the phone, you have to talk to somebody. How many times did I miss the greatest setup of that day? Everything else that traders do, in our opinion, is very subjective. Elliott wave, candlestick patterns, Fibonacci, Ichimoku clouds. I mean, I'm not even sure that Elliott knows how to find the right waves. It's very confusing. We don't do all of that deep dive technical analysis. Appointment-based trading is easy compared to the other systems. Trigger events happen on a regular, predictable schedule, and the markets react, good, bad, sometimes both. Once you know how to handle the moves and you have the right software to compensate for the moves, the software will help you to reduce human error. It's much easier to deal with the complex setups that take hours to occur. Now, we have complex setups. If you're the kind of person that wants complex setups, we can give that to you. But our goal is to reduce the complexity into a time-based system that makes it much easier to comprehend. So trading is easier, has less stress, and you know when you're going to be trading. Appointment-based trades are quick, 5 to 10 minutes usually, sometimes 5 to 10 seconds. And because of that, we have a regular, predictable schedule of events. And like I said, you can schedule your trades and be done trading in less than an hour a week. So people always ask, okay, if your trading system's so great, you're making money, you wouldn't bother teaching. And, it's just not really true. I love teaching. I love trying to help people to learn. People are desperately trying to find different methods of making extra money. And I'm doing both. I'm trading and I'm teaching. I teach appointment-based trading as I said, because I love it. I love teaching and I love trying to help people. The best thing about it, though, is it makes me a better trader. If you've ever taught anything, you know you have to break down your methods. You have to look at the way you're thinking. All your processes get analyzed over and over when you're teaching. You go over all your setups. It absolutely improves my own trading. And I love the success stories from our members. I love looking at their screenshots. I'll show you a couple. Australia GDP, one of our members, $150. And these are real screenshots. These aren't fake. I've got their accounts blacked out or whited out, whatever you want to call it. And these are real screenshots that people send us. Because when our members make money, they love sending us their shots. Here's another screenshot. A member, Jeremiah, made $703 on the U.S. jobs report. Another U.S. jobs report member, Mike, made $520. Now, what's interesting, so we have what we call triggers. Something triggers a scheduled trade. All right. Now, what we do, like I said, it's called appointment-based trading. It's a fancy word for news trading. Okay. The words news trading scare people to death. But we know, because we've been doing this for almost 10 years now, that, like I said at the beginning, news trading is not any more risky than other types of trading. The key is to have your systems in place for when things go wrong, that you're prepared. You have stops, you have targets, you have the ability to get out of a trade early. All of those things, all of that knowledge, all of the learning that you do helps you to become a better trader. So that's the most important thing you want to do, is have your risk elements in place whenever you're trading and no matter what system you are trading. So what we were talking about is we have triggers that create our scheduled trades. And there's quite a few different categories of these trades. We have high impact economic reports, earning reports. We have big company reports, their earning reports. It might be GDP reports. You might have press conferences from the companies after their earnings reports. And another important trigger category would be end of day trades, opening market trades. There's a tremendous amount of trigger categories, hundreds of them. And within these categories, you can pick and choose the ones that fit your schedule and the type of category that you like to trade. So it's important. And let me show you what I'm even talking about. So appointment-based trades, right? So I'm the person that finds our trades. I use the various calendars that are on the market, and I find the trades, and then myself and another person that works in our company helps to create the trade setups. But I use the various calendars that are available to you for free to find my trades. For instance, Forex Factory. Forex Factory is one of our favorites. We consider it probably the gold standard of calendars. When you go to forexfactory.com, you'll notice that there's listings of all of these events that are going to take place. And they also have them color coded. You have an impact rating. A red impact, it means it has more impact on the market. The yellow has less impact. And then the lighter orange has a medium impact. Now, when you're dealing with us, because we're experienced, we know that sometimes the calendar companies are not 100% accurate. Because what's interesting is if you go down to Thursdays is the natural gas report. It's every Thursday at 10:30, and they have natural gas as a yellow. Natural gas can be the devil in disguise. It can act in a way that is so insane you can't believe you're trading it. And if there was a brighter color than red, natural gas should be red. But the point I'm making is when you do anything, when you're learning any new setup, educators like us who are honest and transparent will always teach you the truth about the method that you're wanting to learn. We know that natural gas isn't a yellow. It's not a mild, risk-free trigger. It's a higher risk trade, and we let our members know. And it's the experience of trading all these events that helps us determine which are the safest and the ones that we would most want to trade. And in listening to not the performer, the presenter before me, what he was saying was so important. Someone was asking, well, how many trades, how many options do you send out a week or a month? And it's so important because one of the things that I see over all the years that I've been trading, so he answered 8 to 10. And sometimes people will say, wow, I'm not going to pay for that. That's nothing. I can't make money if I'm only trading 8 to 10 events. What we've learned over the years that if you can find 8 to 10 high quality trades a month, that's the way to make money. You're going to make more money. Most traders are going to make more money trading 8 to 10 good events, 8 to 10 good setups than 20 to 40 lousy setups. Overtrading is one of the worst characteristics traders take on, and it's one of the biggest qualities that cause traders to fail. Overtrading. So I hated being in the markets. I hated having my money at risk. And when I found the method that we trade, when I discovered I could trade on a schedule and that most of the trades were over in minutes, I was like the happiest person that ever lived. And that's what our system is. So I go through the calendar, I find the trigger events, and then we go through another calendar, and we create the first part of our setup, which is our weekly schedule. Our weekly schedule is free. Anybody can sign up for it just by going to our website, 10minutetrades.com. And our weekly schedule is the first element in what we do. The main element I'm going to talk about today, here's what our weekly schedule looks like, just so you could see it. It lists all the events we're watching and possibly trading in the upcoming week. And it is the schedule that I'm going to go by this week in our trade room. So our schedule shows the time that our trade room starts. It shows the event time, the time that we'll most probably be trading. And it also shows some risk elements, whether or not we have a daily report. But that's the first element in what we do, our weekly schedule. And it's very important. Like I said, you can get it for free, www.10minutetrades.com. So here's the setup. Why do these triggers work? For example, why does the quarterly grain report move the grain market almost every time it's released? Specific information is released at a set time every month or every quarter. In this case, the quarterly grain report, the instrument and the information is affected every quarter. It affects the instrument you're trading because data comes out that causes the volatility in the index you're watching and trading. So we take advantage with our system to trade that volatility. So appointment-based trades, what we do most of the time, and not every one of our setups are the same, but we bracket the current price. This is the current price, and then our software puts a bracket on, and when the market explodes, up or down, we get pulled into the market. Now, I will answer everybody's questions after my presentation, so don't worry, I'm not ignoring anyone, and I'll give you all the links, everything. So sit tight. I'll definitely get to all your questions. So the quarterly grain report, it comes out, like I said, every quarter, and it has volatility. We put a buy order above the current price. We put a sell order below the current price. And let me show you a recent quarterly grain report. Now, obviously, it's quarterly. So our software puts orders on the chart. The news comes out, and that was a spectacular, unbelievable move in the corn futures market. That's what we were trading. We also can trade soybeans on that report. If you see that and watch what happened, it's so fast. I'm going to show it to you again because if you never did what we do, it can be confusing. So let me explain it. So what you're seeing here is the corn futures chart. It's just like a stock chart, no different. It's got a price. It's got a current price, and that's that red candle right here where my arrow's moving. Those X's are our orders. What's going to happen at noon on the day of the report? The report's going to get released, and it's going to cause the corn market to move, and it always moves. It's almost never not going to have a move. In this case, it exploded to the downside. It gave me a profit of $2,037, and that was a profit. You saw it. It was less than 5 seconds in the market. Here's the amount of time I was in the market for this trade. Now, I'm not even in the market yet. My orders are on the chart, and I'm in the market now, and I'm out of the market as quick. I was out of the market before I could press stop. This was what we call a nanosecond trade. It took less than a second. It printed the price. It hit my targets. I was out of the market with a $2,000 profit. And the beauty of these types of events is our members trade along with us. One of our members made $580 on a recent quarterly grains report. These are reports that once you learn how to do it, anybody could trade them. Now, quarterly grains, so that was September, I believe. We also had quarterly grains 3 months prior to that. I believe this, price went the exact opposite way. Same type of trade, very, very large move. And that one we made $1,500 also. It looked like it was a tiny bit slower, that trade, maybe by a couple of nanoseconds. But let me try and let me show you what the screen looks like before the orders go on. There's my orders. 12 o'clock, trade's over. That was a $1,500 trade. Again, I was trading the corn futures. Anyone that traded along with us made money on that trade. And I just happened to have the most recent, or let me see if I do. There was also one in January. And I apologize, I don't have January's here, but just for truth and transparency, it moved a little bit less. In the middle of the winter, the grain reports tend to move a little bit less. And I think we only made about $150, $200 on the January report, which sometimes happens. The quarterly grain report, I believe in the last 2 to 3 years, has only had one bad trade where we lost money out of at least 10 of them. So it's been one of our premier trades in our system. Just fantastic. So again, to clarify, the way that we trade, we bracket one of the ways that we trade. And the reason I say that is because not only do we have breakout setups, we have range trades where you can set a range using time, you can set a range using numbers of bars, and you could trade a breakdown or explosion up outside of the range when the range gets broken. So again, just to clarify, if this red candle is the current price, we're putting a buy order above the current price and a sell order below the current price. You saw that one of those trades, the price exploded up, so we were bought into the market. One of the other trades, the price exploded down, so we sold the corn market. And then it hit our target. Our target is on the opposite side of what our entry was, obviously. Otherwise, you wouldn't get out of the trade. Okay? So that is one of the basic ways that we trade. Now, so you can see why these trades take 10 minutes or less. Sometimes they take 10 seconds. An event happens, news, earnings, market opens, end of the day, the market moves, and you're in or out of the trade very, very quickly. So I've shown you where you can find hundreds of these trades. If you learn to use the calendars, and let me show you another calendar. There's 4 to 5 what I would consider great calendars. Investing.com is another calendar that we use very regularly. And these calendars, Investing.com has a really nice feature, especially if you trade the way that we trade. During a trade, if you put the calendar on from investing.com, you'll notice that you have a forecast and then the actual result of the news. Okay. So, for instance, I don't know if yesterday will give me good. Okay. So, yesterday gave me Friday's trading events. So, for instance, yesterday we were looking at a couple events that we were thinking about trading. Yesterday was not an easy day because of what's going on in the world in Ukraine. It makes news trickier sometimes to trade, so you want to trade the big reports. But we had a report called Consumer Confidence. And what's nice about investing.com is this green number, this third row here, is the actual news result. And investing.com, as you're trading, it's nice enough and has a good feature. It shows you the news result. So you could still be in a trade and you might be able to even analyze the news result while you're in the trade, which is a great feature. There's another calendar that we use very, very regularly, and it's called financialjuice.com. And what's very interesting about Financial Juice, and trust me, I'm not making any money by telling you this. They just are a company that we work with because we love their product. They have real-time news if you subscribe to their service, and it's not expensive. So, in other words, you get the news results immediately, faster than any other company. You do pay for it, but you get the news result immediately. And they also have something that makes the price of their service unbelievably valuable. They have a squawk box, and you just click the squawk box, and then during the day, especially if you're busy trading and you don't want to watch and look to read what the news results are, you can listen to the results in your headset. It's a fantastic service, and I love the company Financial Juice. Other calendars that we also use Econoday. They have a very nice calendar. Both US and international events are on their calendar. And also, if you trade Forex, these are calendars that are great if you like to trade Forex as well. We don't love Forex because the brokers are a little bit, they play with the prices, whereas futures are better regulated, let's say, than Forex. And it's, in my opinion, it's less risk to trade events, but this is FX Street. And even though you think of it as a Forex calendar, it's the same events. The same events that move futures are going to move Forex pairs also. So it's just something to understand. You know, when you understand what's going on in the markets, you'll understand why the markets move at various times. How many times have you been in a market, or you've been in a trade, and you got blown out of the trade because the index you were trading exploded and you had no reason why? You had no understanding of what happened. And it might have been because you were caught in a news event. So for us, that never happens because we're scheduling our trades around the news events, appointments. We're making an appointment with the market. So we've spent literally the last 10 years, thousands of hours researching and backtesting all of these trigger events, appointment-based trades. We've narrowed the field from hundreds to just the top 1 to 3 trades of the day. That's what we focus on in our live trading. So why are these trades worthy of making the cut? And I just want to say one other thing that I'm not concentrating on today, but we even do a deeper dive down from the 1 to 3 trades a day. We go to 1 to 3 a week, and we call those our family money trades. And family money trades, it sort of started as a humorous concept, but it really wasn't. But I was spending my time in the trade room, and I was always saying, you know, if I had my son's or my daughter's money and I was going to trade their account, I would trade their money on this trade, or I wouldn't trade their money on this trade. And we realized we had something great here, and we came up with the idea for family money trades. So just so you know, we do have family money trades, and they're making a comeback. Usually at the beginning of the year, we do a lot of reanalyzing, finding new setups, but family money trades are a very important part of what we do. And they are the lowest risk, sort of like the best 8 events that you could find every month. But so let's get back. But what's interesting is there might be 15 events that are really worth trading in a month as well. So why are these 1 to 3 trades each day worthy of making the cut? They're based on triggers that have, and this is the key, this is one of the most important concepts. They're based on triggers that have the highest probability of moving the market and thus the highest probability of resulting in a successful trade. The worst type of trigger is a trade that is dull. It'll move enough to fill you, but then it won't go in either direction after the trade. Now, that's not the worst loser that you can have, but if all the trades and all the triggers you choose are dull, you're not going to make money because you're going to be sitting in the market waiting for a move. So if you took our trade report, for instance, which I'll get into, and put them on an index at the wrong time of day, you'll understand exactly what we mean by dull. But these trade events that we have spent 10 years developing, finding the best ones, and then sending them out to our members on a platter, we call them the daily market movers, DMM for short. Every day, at least 4 days a week, we send out a 1-page report on each of the top 1 to 3 daily market movers for the following day. So the day before, you know how you're going to trade the market if you want to trade along with us. Every daily market mover report includes the trigger, the event we're focusing on, the time of day for the event, the market we're trading, the historical performance of that trade over the past 12 to 24 months. But the key is also the risk level based on its performance, our recommendations when to enter and exit the trade, what targets and stops to use. But I love our personal trade journal because that answers the question, what's your success rate? See, we're not a normal company. Someone who asks me, what's your success rate on everything you do? They don't understand what we do. The right question is, what's your success rate on the US jobs report? That is a sensible question based on what we do. What's your success rate on the ADP report? I would not recommend trading every single report that we send out. I recommend trading reports when they are at their best behavior and the most reliable. And when you do this as long as we do, 2 months ago, we knew that natural gas was not safe to trade. In September, natural gas went absolutely volatile to the point of not being safe to trade. And about 5 weeks ago, 6 weeks ago, natural gas became safe to trade again. So that's the question. What is safe to trade? How has it been doing lately? Because markets change. Everybody knows that right now with what's going on in the Ukraine. The markets are different than they were 3 weeks ago. The markets 3 weeks ago were different than they were 3 months ago. That all has an effect on your setups. That's why when you buy a robot, maybe that robot works perfectly for the first 2 months that you own it. And then all of a sudden that robot is costing you more and more losses every time you use it. Markets change. Every setup needs adjusting based on how the markets are behaving. That's why I love the personal journal that's on our daily report. But I will say this also. Sometimes the markets change so radically, so quickly, you might have to change your setup and start trading it pretty quickly where you might not have a very long personal journal to show people. In other words, there are some setups that we have recently changed because the markets are different. And you have to do testing to help you decide if what you're going to do is safe. If your testing is overwhelmingly phenomenal, then you can take that testing and translate it into a live trade. There are a couple of rules that you have to be aware of if you're a tester. And testing any setup is very important if you want to become a really good trader and an expert in your testing. It's even more important for us because I'm always testing how did this report do recently. So if the markets change, you've got to come up with a new setup and try to back test that setup. But if you test it too far back, it won't be so meaningful because the markets aren't similar to what they are now. So you have to want to be aware of how things are tested so you can decide whether or not to trade. And that's one of the things we offer as well. If we have a new setup, we make it very clear what the setup is based on, how long we've been trading it, etc. And there's also on our daily report, here's an example of it. There's a narrative down below, like for instance, this report is similar to a previous report, it's quarterly, etc., etc. We'll talk about the trade, what risks you might find. We might give an alternative setup. Not everybody likes to trade the same instruments that we trade. For instance, this was our corn setup for that quarterly grain report. So it shows at the top the date of the event, the instrument we're trading, ZC, the risk of the trade, a history of how it moved in ticks over the past 18 months. The key is the yellow line, which is our actual setup. It's a recommended starting point for how we're going to look at trading the market. You know, sometimes markets might change that morning and you might modify your setup. So you don't want to do anything that's etched in stone, but these reports are the building block of everything we do. And then here's our trade journal for the past 6 quarterly grain reports. And you can see we show whether it won, how many ticks it moved, and then a little blurb about what happened that particular month. And that's what we call the DMM, our daily trade report. In my way of thinking, it's probably one of the most important elements of everything that we do. Because if you think about it, it is the building block that we create our whole system around. In other words, we are sending those reports out to our members. We're showing those reports in our trade room, and we're trading those reports. So they're very important. And you can see that we've put a ton of time and energy into these reports, so you don't have to. We don't expect the average trader to put these reports together. A monthly subscription to the Daily Market Movers is normally $67 a month, and I believe it's worth every penny and then some. But we always have a special for Traders Corner. We always do something very reasonably priced at Traders Corner because we know that there's a lot of different companies here, and we want to make it reasonable for you. So our offer today, because you're here, it's a very limited opportunity to get 90 days of the Daily Market Movers for just a fraction of our regular price. Now, here's the deal. When you take action today, you'll get 90 days of the Daily Market Movers. That's 3 months for just $47. Now, that's a steal. It's a $201 value. How do we come up with that? $67 a month times 3. And we're just asking for $47. Not $47 a month, $47 total for the entire 90 days. And that's a phenomenal discount. You can get our Daily Market Movers. Like I said, $47, www.getdmmnow.com. Let me show you a couple of trades that are obviously based upon our Daily Market Movers. For instance, we have a very popular report. Been trading it for years. It's the ADP non-farm employment change, or I call it the ADP payroll report. It has our setup in yellow. This has been one of our favorite reports to trade. So let me show you a recent ADP report, and I'll explain again the way that our system works. So a person would get our daily report put the numbers into the software, and then when the time comes, this is an 8:15 in the morning report. So I'm going to scroll forward to 8:15 in the morning, couple of seconds before. And then before the news comes out, and remember what I was saying before, I have these are my actual charts from our trade room, okay? Our members are watching me trade. They're watching me use our software. They're watching me analyze the daily report. They're watching me look at investing.com, which, remember what I said, it has the expected news result. So let me explain something about why these reports move so you understand 100% why they move. There is a forecast for what this event is going to recover or not recover, what it's going to present in terms of the news event. So for instance, if they were looking for 428,000 jobs to be created and 500,000 jobs are created, that's a large difference between what was expected and what actually happened. That's called the news offset. The news offset, when it's different and nicely different from the expected news, it creates a move in the index. So that's what happens on this ADP report. It explodes down. That was a 2-second trade. And you can see the number was 568,000 jobs were created in the payroll reports instead of 428,000. That's a large offset. We trade gold on that report because we've studied gold and the ADP report, and it moves on that report. And it moved very large. I wasn't trading 50 contracts. I was only trading, let me tell you what I was trading. Let's see. You can see when I put my trade on, all my trades are different. So sometimes I'll trade 4 contracts, 5. I was trading 5 contracts that day. And so that was a very quick 2-second trade, $600 profit. And you could see we took no heat whatsoever on that trade. So the daily market mover that we charge 3 months for this special for just $47 told me how to trade this report in our bracket breakout method. We put the price above and below, the price broke out, it filled us, and we made money. That's exactly how those quarterly grain reports traded, like I showed you. I'll show you one more time. Price comes out, the news comes out, price explodes. That's a breakout trade, okay? And it was over as soon as we could say it's over, and that was a multi-$1,000 trade. Let me show you another popular trade, and not quite as big, okay? Australia GDP comes out 7:30 at night, sometimes 9:30 at night, depending on daylight savings. And you could see, again, you have Australia GDP gets released. We trade the Australian dollar future. So it's a currency future, it's called. No big deal, no different than trading the S&P futures or the NQ, the NASDAQ futures. It's just a different index, that's all. And when the Australian GDP news came out, it caused a big explosion in the price of the Australian dollar future. It pulled me into the market, and again, we had a nice trade and made money on it. It was slower. So you could see it was slower. And I made less. I only made $150 on that trade. Now, also, that particular index is only $5 a tick, where when you trade gold, it's $10 a tick. So it's a little bit easier to make money on trading gold. Now, let me show you one more quick explosion report. You know what? Just for fun, let me show you natural gas, because natural gas, it's fun to trade. So, and we trade natural gas off and on. We haven't been trading it for a while because, like I said, it got very, very risky. But natural gas, this week, it was a slow reaction. It pops up, and it looks like a regular old, comfortable little news trade. But natural gas, like I said, can act like the devil. It could be really scary. It could not work. But I wanted to show you quickly before I get ready to go. Time goes so fast. Let me show you a losing trade because no one ever shows the losers, only winners. So this was a trade We were trading a report called ISM Manufacturing. It's a very popular manufacturing trade. And the news came out and it was mixed. There's two elements that make up the report. One of them was positive, one of them was negative. Sometimes that creates indecision in the market that we're trading. We were trading gold. It filled me short, but then the price went up and I lost a couple of $100 on that trade. It didn't work. And that's going to happen. Not every trade is a mega $1,000 trade. So one more, let me show you one more nice one. We love the grain trades because they're awesome. This was the WASD trade. I remember this trade. It was in April. It looked like the news came out early because that was before the news. I decided to trade soybeans instead of corn at the last second because I didn't like that early move in corn. And soybeans had a profitable trade. You'll see it's going to pop up, I believe. There go soybeans. It wasn't monstrous, but it was a nice, solid, profitable trade using our DMM, our daily market mover, to set up the report. So this is not a subscription. It's a one-time investment. We're not going to charge your card again. After 90 days, it's going to expire, and we hope that you're going to love it so much you'll ask us to re-up, okay? So it's just $47 for 90 days, www.getdmmnow.com. It's a fantastic deal. Just as a reminder, we trade appointment-based trading. We're currently using the NinjaTrader platform, and we trade futures. Please, we're not trading stocks. People get very confused. We trade futures. So, folks, you can get the daily market movers for just $47 for 90 days. We're not going to charge you again. It's an awesome deal, www.getdmmnow.com. Now, I figure I've got about 2 minutes. I don't want to go over. Let me go over all your questions because I see there's a bunch of folks that I know, and I want to thank all my members and friends for being here. You always support me, and I thank you so much. And Donna, hello to you as well. Asu was asking for the link for the free schedule. That was www.10minutetrades.com. The number 10minutetrades.com. The number for the address for the sale is getdmmnow.com, www. John was asking, we have late afternoon and evening trades on the schedule. That's true, John. I remember you. I know you're in Hawaii, so that's awesome. Yes, we have trades that are in normal market hours, trades that are after market hours. We don't trade one direction for report. We don't care what the direction is. Whatever direction we get pulled in is the way we go. We can trade long or short. So I answered the percentage win. We can tell you what the percentage win is per report. And can your influence trades help you in trading options? I don't recommend our service for trading options, honestly. And then the last question, very important, how much capital is required? There are now something called micro futures, but here's the most important thing that I'll say before I go. Traders, the biggest mistake that everybody makes or that many people make is they don't put enough money in their account. The question should be, what's the most I can put in my account to trade effectively, not what's the least I can get away with. You can get away with $2,500 to $3,000 if you trade micros, but I would recommend put double in what you think you can afford so that if you have a couple of bad trades, you will survive and you don't panic and worry about running out of money. So, folks, I want to thank you all so much for listening. And Rob, I don't know what else I could say. Thank you so much for having me here for this presentation.